Hello, hi guys. This is CA Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. In the today's class, we will be revising SAE 3400 series standards. In this series, we are having three standards: 3400, 3402, and 3420. Now, first of all, what is this SAE series is all about? It is about assurance engagements. Now, you might get a doubt, sir. Even on the historical financial statements, also auditor will provide assurance only. Can't we call those engagements as assurance? The answer is no. If auditor provides assurance on historical financial statements, then they will be known as audit engagement. Next, if auditor provides assurance on other than historical financial statements, then you will call that particular engagement as assurance engagement. Examples of items other than historical financial statements: prospective financial statement, or providing assurance on controls. Okay, these type of engagements will be covered under SAE 300 SAE series. Now, for audit of historical financial statements, all the standards from SAE-200 to SAE-720 will be applicable, whereas for assurance engagement, SAE-200 to SAE-720 they will be applicable. Along with them, SAE-3400 series will also be applicable. Okay, now as I have already told you, there are three standards under this series. The first standard, that is SAE-3400, deals with assurance on prospective financial information. Now, what is this prospective financial information? Historical financial statements means after the transaction has taken place, you will prepare financial statements at the end of the year, whereas prospective financial statements relate to future transactions. Okay, and these prospective financial statements, they are of two types. One is forecast and another one is projection. What is the difference between forecast and projection? Generally, prospective financial information, they will be prepared based on assumptions. Right now, what type of assumption you are taking is the difference between forecast and projection. Now, if assumptions that you are taking are based on past data, based on past history, past trend, then that particular that particular prospective financial information will be known as forecast. Okay, the assumptions that you use in the forecast will be based on past data. Okay, you can call them as best estimate assumptions, whereas if you use hypothetical assumptions, then that particular prospective financial information will be known as projection. Example, let's say for example, in the past 5 years sale has increased at rate of 5%. Now, based on the past trend, you are forecasting that in next 5 years also sale will increase at 5%. So here that assumption is based on past data, so this prospective financial information will be known as forecast. Now, coming to projection. Now, let's say you wanted to project how the sales will be if a new competitor comes into the market. Okay, this is a hypothetical assumption, a new competitor coming into the market, or if there is a recession in the market, then how the sales will be. So this type of hypothetical assumptions will be taken in case of projection. That is the difference between forecast and projection. Hope you got it. So if you see, there are three standards under this series. First standard deals with the prospective financial information, assurance, providing assurance on prospective financial information. Next standard deals with providing assurance on controls at service organization. If you see, we have discussed SAE-3402, which deals with the controls at service organization. Both SAE-3402 and SAE-3402 are linked. We will see what is how these standards are connected. Next, SAE-3420, which deals with providing assurance on compilation of pro forma financial information that will be included in prospectus. Okay, now first of all, start with revision of SAE-3400, which deals with prospective financial information. I have already told you, prospective financial information or the financial information relating to future, and these prospective financial information can be either a forecast or a projection or a combination of both. Now, in a forecast, the assumptions that you use will be best estimate assumptions, whereas in case of a projection, the assumptions that you use will be hypothetical assumption. Hope that is clear. Now, scope of SAE 3400. What is the scope of SAE 3400? It provides guidance to the chartered accountant on how to give assurance on assumptions. If you see, chartered accountant, he will not give assurance on the prospective financial information. No, he will give assurance on the assumptions used for prospective financial information, because prospective financial information or financial information related to future. So the chartered accountant also doesn't know whether the same figures will actually arrive even in future also. You cannot correctly predict. Okay, so you will not provide any opinion on those figures. Instead, you will provide assurance on the assumptions that have been used for preparing those prospective financial statements. Hope that is clear. See, this standard provide guidance to engagement to examine report on prospective financial information, including examination procedure for best estimate and hypothetical assumptions. And this essay does not apply to descriptive, or this essay does not apply to general or narrative terms. If you see in the annual report, management it will speak about its future business in normal general descriptive terms, like in the next 5 years our sales will grow this much because of this reason, and because of that the profit will have this much impact. Like this, about future, management will make certain narrative descriptions. For such narrative descriptions, this standard is not applicable. Only for the quantitative terms, only if you have quantified, then the standard SAE 3400 will be applicable. Okay, next, acceptance of the engagement. At the time of acceptance of the engagement, auditor has to discuss, the chartered accountant has to discuss certain points with the management. We call them as terms of engagement. What will be included in the terms of engagement? First is intended use of the information. Okay, for which purpose you will use these prospective financial information? There will be various purposes. Let's say if you wanted to raise certain capital from investors, then investors can ask you to show the picture of business in the next 5 years. Or if you wanted to take a loan from the bank, then bank might also ask you to show the picture of the company in the next 5 years or 10 years. So what is the intended purpose of these prospective information, and to whom these prospective information will be distributed, whether it is distributed to all the users or only to the limited users. Next, what are the nature of assumptions that you are using for this prospective information, whether they are best estimate assumptions or they are hypothetical assumptions. You have to discuss this with the management. Next, what are the elements to be included in the financial in this information, and what is the period covered by this prospective financial information, whether it is for next 5 years, whether it is for next 10 years, or what is the period that has been covered. Okay, and if auditor feels that, the chartered accountant feels that the assumptions that the management has taken are unreasonable, then the chartered accountant, he will not accept the engagement. Next, nature of assurance. Here if you see, the chartered accountant, he will provide assurance on the assumptions but not on the prospective financial statements. He will also provide assurance on whether the prospective financial information has been prepared as per the assumptions or not. Okay, two assurances he will provide. First one, whether the assumptions are reasonable or not. Next, whether the prospective financial information has been prepared as per the assumptions or not. These two assurances he will provide. Next, responsibility for preparation and presentation of this prospective financial information. Obviously, management will be having responsibility for preparation and presentation of this prospective financial information, including making of the assumptions and explaining the basis for the forecast. Next, can professional accountant be associated with prospective financial information? If you see, as per clause 3 part 1 of second schedule to the Chartered Accountants Act, a chartered accountant in practice will be deemed to be guilty of professional misconduct if he allows his name or the name of the firm to be used in respect of a prospective financial information which gives a belief to the users that the chartered accountant has watched for the accuracy of the prospective financial information. But if chartered accountant doesn't watch for the accuracy of the financial information that is present in the prospective financial information, then chartered accountant can sign that prospective financial information. Okay, in the note he should provide that, he should say that he is not watching for the accuracy, and he should also clearly indicate all the assumptions that have been used for preparing this prospective financial information. Then he can use his name with the prospective financial information. Using name with respect to prospective financial information means you can sign the prospective financial information. So chartered accountant can associate with prospective financial information provided he doesn't he doesn't give a belief to the users that he is watching for accuracy of the figures. Next, duties of member who is examining prospective financial information. Okay, if you are examining the prospective financial information, what are your duties? First of all, you have to verify whether prospective financial statements has been prepared on the basis of assumptions or not. Next, you should also see whether the best estimate assumptions that have been made by the management are unreasonable or not. Okay, they should be reasonable. Next, all material assumptions should be adequately disclosed in the prospective financial information, and prospective financial information should be prepared in a consistent basis from the historical financial statements. That means whatever the accounting policies that you have followed for preparation of historical financial statements, the same accounting policies you should follow even for the preparation of prospective financial information. Hope that is clear. Next, examining procedures. See, while examining these prospective financial information, first of all, auditor will see whether he is having knowledge to examine the prospective financial information based on his past experience. Then he will also see whether management is competent enough to prepare the prospective financial information. What is the experience of management in preparing prospective information? Next, he will also see whether the people in the engagement team are having experience to prepare the prospective financial to verify the prospective financial information. Next, he will also calculate risk of material misstatement, that is likelihood of material misstatement. Next, he will see how to what extent these prospective financial information are affected by management's judgment. Next, what is the source of information for preparation of these prospective financial information, and whether the business of the company will be stable or unstable. Okay, all these will be considered by the auditor or the chartered accountant. Next, presentation and disclosure. First of all, the prospective financial information should be presented in a very informative manner. It should not be misleading. That is the first point. Next, you should also disclose all the accounting policies that has been used for preparation of these prospective financial information. Next, assumptions should also be clearly disclosed along with information whether such assumption is a best estimate assumption or a hypothetical assumption. Next, the date as on which these prospective financial statements have been prepared, and whether the assumptions that have been taken by the management are relevant as on the date of preparation of prospective financial statements or not. Even that has to be disclosed in the prospective financial statements or financial information. And if there is any change in the accounting policy, the management has to disclose that particular change in the prospective financial information. Next, report on the examination of prospective financial information. What will be the report? First of all, there will be title, there will be address. Next, you need to identify that these prospective financial information has been verified. Next, you should also refer to the standards on auditing that are applicable for conducting these assurance engagement. Next, you have to specifically identify responsibility of the management with respect to preparation of these prospective financial information. Next, you should also state in your report what is the purpose of these prospective financial information and to whom this prospective financial information will be circulated. And you should also state the examination procedures that you have followed for examining these prospective financial information. Next, you should also state whether the assumptions that have been taken by the management are reasonable or not, and you should also give your opinion on whether the prospective financial information has been prepared as per the assumptions or not. Next, appropriate caveats. Caveat means conditions. See, for some of the assumptions that the management has taken, there may be some conditions like in the past 5 years sales have grown at 5%, But in the next 5 years, sales will grow at a rate of 10%, subject to the condition that the research that we are conducting with respect to a particular product becomes successful and we successfully launches that product in the market. Okay, so this is the condition. This condition is known as caveat. Okay, subject to this condition, our sales rate growth will be 10%. That is known as caveat. If at all there are any caveats, you need to properly uh, report them in the report that you give. Next, date of report, place of signature, and the signature. Okay, next, you should also specify in your report that actual results are likely to be different from the prospective financial information since anticipated events frequently do not occur. Okay, you have to specify that the actual results that might occur in the future, they might be different from the prospective financial information, from the information that is shown in the prospective financial information, because the future is uncertain. We cannot exactly predict the future. Because of this reason, the actual figures might vary. Okay, this information has to be given for both projections as well as for forecast. Next, in case of projection, you have to say that, see, in case of projection, prospective financial information has been prepared for particular intended use using set of assumptions that include hypothetical assumptions about future events and management action that are not necessarily expected to occur. Okay, we have taken certain hypothetical assumptions. These hypothetical assumptions are not likely to occur. Okay, that information should also be given in the report. Okay, this point should also be mentioned in the report if the prospective financial information is a projection. Next, documentation. What documentation you have to maintain? See, matters which are important in providing evidence to support report on examination of prospective financial information and evidence that such examination was carried out in accordance with this standard, that is SAE 3400. Okay, so this has to be documented. Yes, now we'll move to SAE 3402, which deals with assurance on controls at service organization. Now, if you remember, we have discussed SAE 402. There is a link between SAE 402 and SAE 3402. Before starting this standard, first of all, let me explain you context of this SAE 3402. Let's say, for example, yeah, here if you see, there is a company A Limited. Let me use ink. Yeah, there is a company A Limited. Now this A Limited has outsourced payroll activities to B Limited. We call A Limited as user entity, B Limited as service organization. Now A Limited will be audited by a particular auditor. We will call him as a user auditor. Now auditor, while conducting audit, he will first of all verify the controls. Now the payroll expenses like PF, ESI, salaries, all those will also be included in the financial statements of A Limited. So while auditing them, the user auditor has to verify the controls around that expenses or controls around processing of this payroll activities. But this processing of payroll is done by B Limited. So the auditor, the user entity auditor, has to go to B Limited, that is service organization, for verification of controls. Okay, if only user auditor, only one auditor goes to B Limited, that is a service organization might facilitate him to verify the controls. But service organization will not be providing the services only for A Limited. Just like A Limited, there will be various other clients that service organization will be having, like C Limited, E Limited. Okay, for all of those clients, service organization will be providing the same service. Now the auditors of those user entities will also come to B Limited asking to verify controls. Now if B Limited keeps on facilitating all these auditors to verify the controls, B Limited cannot do its business. So what B Limited will do is, it will appoint an auditor and we'll call him as service auditor. What this service auditor will do is, he will audit the controls at service organization and he will give the report on controls at service organization. Now this report which the service auditor has given will be given to the user entity auditor. Okay, now SA-402 we have discussed. SA-402 deals with responsibilities of user auditor when user entity uses service organization. So SA-402 was in the context of user auditor. Now SAE-3402 describes about how service auditor will conduct audit of, or how service auditor will provide assurance on controls at service organization. This is the context of SAE-3402. Hope that is clear. Now I hope you are clear with these terms. Now moving into the standard SAE-4302. What is the scope of SAE-3402? See, SAE-3402 is applicable only for those engagements in which service auditor provides assurance on controls at service organization with respect to services that are being given to user entity. Okay, only in this context SAE-3402 is applicable. If let's say for example a particular auditor is appointed to provide assurance on controls on the entity, but this engagement is not in the context of services provided to user entity, then for such engagement, for such standalone engagement to just to verify the controls at the entity, for such engagement SAE-3402 is not applicable. Okay. Next, objectives of service auditor. What are the objectives of service auditor? Now if you see, there are 4 points that you need to remember. First point is description of system. Now service organization is there, it would have implemented the internal control system. Now how it has implemented internal control system, what is its structure, how it is working. Okay, with respect to all these, service organization will prepare a document. That document will be known as description of its system. Okay, now service auditor is there, he has to verify whether this description of system is properly or fairly representing the actual system. That is the first objective of service auditor. Next, in this description of system, control objectives will be there. Now controls has to be designed so as to achieve those control objectives. Now the second objective of service auditor is to check whether controls have been properly designed or not. Okay, next, third objective will be, in case if the service auditor is giving type 2 report, then his objective would be to verify whether controls are operating effectively or not. These are the objectives of service auditor. And service auditor will also see what criteria has been used for establishing this system of internal control. There will be criteria like COBIT, COSO. These are the frameworks. Just like for preparation of financial statements, we are having applicable financial reporting framework. Even for preparation of this description of system and implementation of the internal control system, there will be frameworks like COSO, COBIT, ISO. Okay, all that we have discussed in chapter number 4. So what criteria has been used? So these are the objectives of service auditor. Okay, hope you are clear with this. Next, coming to how the engagement is proceeded with. First of all, in this engagement, to provide assurance on service organization's control, the service auditor has to comply with all the ethical requirements and also independence, because here he is providing assurance. Next, the service auditor, he has to determine who is management, who is those charged with governance in the organization, for the purpose of inquiring them and for the purpose of communicating with them. Next, service auditor, before accepting this engagement to provide assurance on the controls at service organization, what the service auditor has to do is, he has to first of all check whether he is competent enough to perform this engagement, whether his team is having proper experience and expertise to perform that engagement. Next, he should also check what criteria is being used for implementing the controls at the service organization, whether that criteria is acceptable or not. Just like while accepting audit engagement, you will check whether the applicable financial reporting framework is acceptable or not. Just like that, while accepting this assurance engagement also, auditor has to check whether criteria is acceptable or not. Okay. Next, assessing suitability of criteria, whether that criteria is suitable for the purpose or not. Basically, for example, let's say in order to implement internal controls with respect to information technology, you will be using criteria COBIT, whereas there is also COSO framework, which is a comprehensive framework. So based on your requirement, you should use a framework. So whether such criteria is suitable for your purpose or not. Next, you have to obtain understanding of the service organization's structure and service and controls implemented at the service organization. Next, you should also determine materiality. Here materiality means acceptable rate of deviation. Just like in the financial statements you will determine materiality, here in case of controls you have to determine acceptable rate of deviation. Next, you need to obtain audit evidence. I have told you, you will verify three aspects: whether description of system present fairly or not. So with respect to description of system, you have to obtain audit evidence. Next, you will see whether controls have been properly designed or not. With respect to this aspect also, you have to obtain audit evidence. Next, you will see whether controls are operating effectively or not. For this aspect also, you need to obtain audit evidence. Okay, three audit with respect to these three areas, you need to obtain audit evidence. Next, you have to understand if the organization is having any internal audit function, whether service organization is having any internal audit function, because if internal audit function is there, the service auditor will determine whether any of the work that has been performed by the internal auditor can be used by him. Next, you should also determine subsequent events. What is meant by subsequent event in this scenario? Let's say, for example, the management has prepared description of its service on 1st April 2025. Now the auditor is giving his assurance or giving opinion on this description on 30 September 2025. Now the events that have occurred between this period will be known as subsequent events. The auditor has to check whether these events are having any effect on his report, and whether these events are having any effect on the description of system. Okay. Next, written representation. The service auditor should also obtain written representation stating that in this this written representation has to be obtained by the service auditor from the management. What should be there in this written representation? Management has to reaffirm, that is reconfirm, the assertions that it has made through description of system. Next, management should also provide in this written representation that it has given the auditor all the relevant information that is necessary. Next, management should also state that if at all there is any non-compliance with law or regulation that has been identified in the organization and management is having knowledge about that, management has communicated the same to the auditor. Next, if at all there is any deficiencies in the design of internal control, the same has been communicated to the service auditor. Next, if at all there are any instances of deviations in the control, even those instances communicated to the service auditor. Next, if at all there are any subsequent events that are having impact or that will affect the service or auditor's report, even those subsequent events are also communicated to service auditor. Okay, like this, a written representation has to be obtained from the management. Next, reporting. In the reporting, first of all there will be title, next there will be addressee. Next, in the report, the service auditor has to identify description of the system. Next, those part of service organization description on which service auditor is not providing any opinion. Okay, there will be, if let's say for example, on any part of description of system, service auditor is not giving any opinion, then the service auditor has to mention that these items, on these items I am not giving any opinion. Next, if the description refers to need for complementary user entity controls, the service auditor has to mention that service auditor has not audited the complementary user entity controls. I guess you already know what are complementary user entity controls. See, let me tell you. Those controls that are operated at user entity are known as complementary user entity controls. Why these are necessary? Let's say for example, one of the control objective is data privacy. Now, in order to achieve data privacy at the service organization, there are controls. Now, the data that is processed by service organization will be shared with user entity also. Now there is a possibility that at the user entity this data might lose its privacy. So in order to maintain the data's privacy, there should be complementary user entity controls even at the user organization also. Okay, so those are known as complementary user entity controls. If at all any such complementary user entity controls have been required in the description of system, then service auditor has to mention that I have audited only the controls at service organization and I have not verified the controls, I have not verified the complementary user entity controls. And proper working of complementary user entity controls is very much necessary in order to effectively or for effective working of the controls at service organization. Okay, this point you need to mention in your report. Next, if services are performed by sub-service organization, the nature of activities performed by such sub-service organization should also be mentioned in the assurance report. Sub-service organization means the user entity has outsourced its services to service organization. Now let's say service organization is not having knowledge in that area, or service organization has more work. In that situation, service organization will again outsource that work to sub-service organization. If at all any such work has been outsourced to sub-service organization, you need to mention the nature of work that has been outsourced to sub-service organization in the report. You need to identify. Next, identification of criteria. Criteria means framework like COBIT, COSO, ISO. Okay, all these frameworks. Next, statement that report, and in case of type 2 report, description of test of controls are intended only for user entities. Okay, whatever the tests of control that I have performed, they are relevant only for user entities, not for any other person. That is in fact restriction of the report. Okay, next, statement that service organization is responsible for preparing its description of system, for providing the services, for stating that control objectives and designing and implementation. Okay, all these are the responsibilities of service organization. Okay, service auditor doesn't have responsibility for this. In a way, this is a management responsibility paragraph. Next comes auditor's responsibility paragraph. What is the auditor's responsibility? Service auditor's responsibility is to express opinion. Okay, next, you have to give a statement that this engagement was performed in accordance with SAE-3402, and you should also give summary of procedures that you have performed. Okay, all the list of audit procedures that you have performed on the controls. Next, if the controls are having any limitations, you should also state limitations of controls. And in case you are giving a type 2 report, you have to give your opinion on the following: whether description fairly presents for specified period or not. If you see, there are two types of reports that the service auditor can give. One is type 1 report, another one is type 2 report. Now type 1 report will be as on a particular date, whereas the type 2 report will be for a specified period. Okay, for a specific period. Now in type 1 report, auditor will give opinion only on description of system and design of internal controls, whereas in type 2 report, auditor will give opinion on description of system, design of controls, and also operating effectiveness of controls. Okay, the same will be there here also. Okay, type 2 report what will be given, type 1 report what will be given. Next, date of service auditor's assurance report. Okay, on which date you are giving signature, place of signature. Okay, this is what will be reported in the assurance report on controls at service organization. Next, additional matters requiring reporting in type 2 report. See, if at all the service auditor is giving type 2 report, then in type 2 report you will give opinion on operating effectiveness of the controls. Now in order to check operating effectiveness of the controls, you have to perform test of controls. So if you have performed such test of controls, you have to describe all the test of controls that you have performed. Okay, this description can be given either as an attachment to the audit report or in the main audit report itself. Next, you will modify your report in the following situation. what are the situations in which you will modify your report? First situation, if description of the system is not presented fairly. Okay, if the description of the system is not as per the actual system that has been implemented, in that situation you will modify your opinion. Next, if the controls are not properly designed to achieve its objective, then also you will modify. Next, if controls are not operating effectively, then also you will modify. Next, if auditor is not able to obtain sufficient appropriate audit evidence to verify the controls, then also you will modify. Okay, these are the situations in which you will modify your opinion on controls at service organization. Hope that is clear. So by this we have completed revision of SAE-3402. Now moving to the next standard, which is SAE-3420. Now this standard deals with auditor or the practitioner providing assurance on pro forma financial information that will be presented in prospectus. Now the question that might arise is, what is meant by pro forma financial information? Example, let's say a company wanted to raise 20 crores through IPO or FPO. Now this 20 crores, out of this 20 crores, company will use 10 crore for factory construction and remaining 10 crore as working capital. Now let's say company is making this public issue in the year 25-26. Now in the prospectus it has to present pro forma financial information. That means if after raising this amount and deploying this amount for the respective purposes, how the financial position and how the financial performance of the company will look like. Okay, that has to be presented in the prospectus. So for this, what you will do, you will take the unadjusted financial information. For this purpose, the unadjusted financial information would be audited financial statements for the year 2025. Now you have taken unadjusted financial information, which is the financial information for March 2025. For this you will make adjustments. These adjustments, you have raised 20 crore, so capital will increase, bank balance will increase, and let's say you have deployed this out of this 20 crore for construction of factory, so asset will increase. Next, working capital will increase. Once factory has increased, once factory has come, the consumption of raw material will increase. Based on that, output will also increase, sales will increase. So because of this, what impact or how the financial statements or financial position of the company will look like, this is preparation of pro forma financial information. This is known as pro forma financial information. Okay, not only just for financial statements, even for a particular item, okay, for a particular financial item you can prepare pro forma financial information. Okay, pro forma financial information means taking unadjusted financial information and making the adjustments to it is known as pro forma financial information. Now if the practitioner has been appointed to provide opinion or to express assurance on this pro forma financial information, he needs to comply with SAE 3420. Okay, what is pro forma financial information? I have already explained you. Now objectives with respect to SAE 3420. See, the objective of SAE 3420 is to enable the practitioner to obtain reasonable assurance about whether pro forma financial information has been prepared as per applicable criteria or not. Here also there will be applicable criteria. Applicable criteria is nothing but applicable financial reporting framework, and to report in accordance with practitioner's finding. Now compilation of pro forma financial information. How will you compile pro forma financial information? The two steps. First of all, you will take unadjusted financial information. For that you will make adjustments and you will present pro forma financial information. Okay, identify source of unadjusted financial information, making pro forma adjustments and presenting the resultant pro forma financial information. Now nature of practitioner's responsibility. Now if you see here, practitioner is not responsible for preparation of pro forma financial statements. Management is responsible for preparing pro forma financial information. Practitioner is responsible only for providing opinion or assurance on whether pro forma financial statements is prepared as per applicable criteria or not. Next, steps involved in such engagement. Firstly, engagement acceptance. Just like any other engagement, while accepting engagement to perform or to provide assurance on pro forma financial information, the chartered accountant has to see whether he is capable, whether he is competent enough to perform this engagement or not. Next, he will see whether the applicable criteria is suitable and acceptable or not. Next, he will also check what should be the wording of the opinion that has to be given, and in order to give that particular wording in the opinion, what procedures he has to perform, okay, to achieve that type of wordings, what procedures he has to perform on pro forma financial information. Next, he needs to obtain sufficient understanding of the entity, and if the event or transaction includes acquisition of a acquiree, then the chartered accountant has to see whether he can obtain sufficient appropriate information from the acquiree. Let's say, for example, A Limited is acquiring B Limited. Now, A Limited is preparing a pro forma financial information wherein it is presenting the position after acquisition of B Limited. Okay, after acquiring B Limited, what will be the financial position, or what will be the, how will the financial statements will look like? These adjustments A Limited is making. Now, in this situation, the auditor, the chartered accountant of A Limited would not have conducted audit of B Limited. So here in this situation, the chartered accountant, he has to check whether he will get sufficient appropriate evidences from the B Limited with respect to its financials, that is acquiry. Next, planning and performing the engagement. Now, while planning and performing the engagement to provide assurance on pro forma financial information, first of all, you have to calculate materiality, and you should understand how responsible party has compiled pro forma financial information. That means management, how management has prepared pro forma financial information. Next, practitioner shall obtain evidence about the appropriateness of source from which unadjusted financial information has been extracted. Okay, the practitioner, he should obtain evidence about the source from which unadjusted financial information has been obtained. Next, if there is no audit or review report on the source from which unadjusted financial information has been extracted, then practitioner shall perform procedures to be satisfied that source is appropriate. Okay, if at all the unadjusted financial information is unaudited or no report is available, then practitioner has to perform procedures to ensure that the source from which the unadjusted financial information has been taken is appropriate. Next, he should also obtain evidences with respect to the adjustments that you make. Okay, first one, the adjustments that are related to events or transactions that have that is pro forma adjustments, which is adjustments to unadjusted financial information that illustrate impact of significant event or transaction as if event has occurred. Okay, pro forma adjustment means that only event has not yet occurred, but if the event has occurred, how will it will impact the financial statement, that is pro forma adjustment. So you have to obtain evidence with respect to such adjustment, and you should also obtain evidence with respect to the adjustments that have been made in order to bring pro forma financial information in compliance with applicable financial reporting framework. Okay, next, practitioner shall also read other information included in the prospectus. Now, in the prospectus, apart from pro forma financial information, various other information will also be included. So the practitioner has to check that the other information is consistent with the pro forma financial information. Okay, next, opinion, unmodified opinion. If a practitioner feels that the pro forma financial information has not been prepared as per the applicable criteria, then he will give unmodified opinion. Next, modified opinion. Sorry. If a practitioner feels that the pro forma financial information has been prepared as per applicable criteria, then he will give unmodified opinion. If they are not prepared as per applicable criteria, then he will give modified opinion. Now, if any law or regulation precludes, that means prevents, from publishing prospectus in which there is pro forma financial information on which modified opinion has been given. Okay, see, pro forma financial information will be included in a prospectus. Together with the prospectus, the pro forma financial information will be published to the users. Now, if law or regulation precludes, that means prohibits from publishing this prospectus which contains pro forma financial information on which modified opinion is given, then the chartered accountant, he has to withdraw from the engagement, because if he is giving modified opinion, law is not allowing to publish them along with the prospectus. So in such a situation, why to accept the engagement and to give modified opinion? It is better to withdraw from the engagement, right? So he has to withdraw from the engagement. If law or regulation permits giving such type of opinion, then you can continue the engagement and you can give that opinion as per the respective framework. Next, emphasis of matter paragraph. If the practitioner wants to emphasize any disclosure that has been already made in the prospective financial information, then he can emphasize that in his assurance report under emphasis of matter paragraph. Next, assurance report. What will be the format of assurance report? As usual, first of all, there will be title, then there will be addressee. Then in the introductory paragraph, you need to identify the pro forma financial information and the source from which unadjusted financial information has been obtained, and the period that is covered by this pro forma financial information, and reference to the applicable criteria as per which this pro forma financial information has been prepared. Next, you should also include a statement that responsible party is responsible for compiling the financial information, and practitioner is responsible solely for expressing opinion on this pro forma financial information about whether pro forma financial information has been prepared as per applicable criteria or not. Okay, next, a statement should also be included that stating that the pro forma financial information and this engagement has been performed as per SAE-3420, and you have to use any of the following paragraphs for the purpose of providing opinion. They are: pro forma financial information has been compiled in all material respects on basis of applicable criteria, or pro forma financial information has been properly compiled on the basis stated. Okay, your opinion paragraph has to include any of these two below points. Next, signature and date and place of signature. So this is revision of SAE 3420. By this we have completed revision of all the three standards under SAE series. Okay, and before winding up this class, a small information: we have recently launched a Lecturepedia app. On this app, you can practice MCQs of all the subjects of CA Final, CA Inter and CA Foundation. Along with this, you can also purchase classes of various topmost faculties on Lecturepedia app. You can download this Lecturepedia app from Play Store. Okay, I'll be winding up this video as of now. We'll meet in the next video. Until then, take care. Bye bye. See you.